thank you so much once again for joining me here at our studio here at Commercial Property Club, our podcast. We're on Port Chapter CPA 47, and today we would be bringing another value-add episode to our network of our investors, a network of our newbies, and network of people that are joining us here at our podcast station. Today's topic is a fabulous one, in which we're going to look deeply into taxes and insurance. Insurances are in the scope of 2026 here in the Texas area. Don't go away. Grab your coffee, grab your pen and pad. You're going to need to take some notes here. I'll be right back. All right, thank you so much for joining me once again. I am your host, Ola Ibiwoye. Today's topic is going to be practically looking at some aspect of taxes and insurance. The topic for today is tax insurance and tax recalibration, which is re-engineering Opex, which is your operating expenditure in the fullness of what we see in 2026. And today we're going to look decisively on some aspect of management when it comes to assets. Today let's look at what it means in terms of some aspect of deal killers, silent deal killers, when we look at things in which we will look typically in syndication cycle across Texas. We saw the cash flow wipe out also too in previous years, but it wasn't because of tenant non-payment or crashing occupancy. It was because of some aspect of insurance and taxes. Between 2021 and 2024, tax property insurance rate surged about 30% to about 80% year over year due to some aspect of hail, windstorm, and practically climate affecting some of this asset. And at that same time, County Appraisal District aggressively reevaluated properties in the upward direction. That's Texas. So operating expenses exploded, destroying projected debt service coverage ratio. But today we're seeing an operational recalibration. Insurance markets are stabilizing. We're seeing new tax exemptions that are taking effect, and also pro-tech in the aspect of allowing smart operators to re-engineer their bottom line. Today we'll be discussing how to cut there about 10% to your there about 15% of your operating expenditure and unlocking hidden net operating incomes. That's always the goal. You want to increase the bottom line when it comes to your P&L. I'm talking about your profit and loss statement. When it comes to, for every asset, there is a profit and loss statement that comes with it. So you wanna look at that and make sure you have that on the check. So we're going to look at how to cut operating expenses. Let's look at re-engineering property taxes also too. The 2026 landscape, that's what we're zeroing on. In Texas, we don't have a state income tax, as we by now know, which is fantastic for population growth. That does actually attract people from other states to move in. Most states that have state taxes with the federal taxes, they normally would head towards Texas because of this singular reason. But the state gets its revenue through property taxes, actually. Yeah, talk about, so charging one for one. For years, county appraisal district like the Dallas County, the Travis County, the Austin County, as well as the Harris County in Houston, assumed every property was worth its peak in 2021 purchase pricing. But value discovery has shifted it has really shifted. Let's take some examples. I'm going to look at the scope of a matrix of taxes first of all, then I'll look at insurance. Actually, net operating incomes your corporate shifted from thereabout 30.5% to thereabout 5.7%. Leverage in 2026 proposition, personal property changed a little bit. Then when it comes to insurance, also too, there's restructure deductible there about 5% for wind, hail, all other perils, also to deploying water leak sensor for carrier premium discount also to could be factored in. Now, what are the strategy? Let's look at one strategy: the income approach appeal strategy. Most appraisal districts use mass appraisal method that rely on market sales. To contest your property taxes, you actually need to employ the services of a tax attorney who must argue using the income approach aspect of things. Usually your attorney would look at your income and be able to argue your case better, showing the appraiser district your actual trailing 12-month operating statement, proving that sometimes you give high concessions and increase operating expenses, lowering your real net operating income. Combining that low net operating income with high market cap rate like your 5.5% to 5.8%, your implied tax valuation drops actually substantially. Now, another strategy you can employ is the strategy of business personal property BPP exemptions. A major 2026 change that many enterprise operators miss is Proposition 9, which increases the tax business personal property tax exemption from $2,500 to thereabout $125,000 per status. By properly assigning tangible property, personal property, maybe like your clubhouse, furniture, gym equipment, so some other aspect of your maintenance tools that could correct taxable status. Large properties can carve out meaningful tax obligations. Legally you could really bring down your bottom line by that. Let's look at how do we restructure the insurance stack of things. We've talked about taxes, employing two strategic methods to re-engineer your taxes. Let's look at how do we restructure your insurance. That's another aspect of things that really does help, or rather contributes to your bottom line. Insurance in Texas has evolved from a simple line item quotes into a complex financial engineering exercise, I would say. If you as a GP is just taking the first renewal quotes from a standard carrier, a service provider, I mean, I'm talking about your insurer, you're leaving money on the table. You have to really get a lot of quotes out there. The deductible restructuring also too, you got to look into that. Your deductible when it comes to wind, hail, in situations like that, obviously that's included in the comprehensive insurance. The largest drivers of tax insurance premium is in that portion of coverage. Instead of carrying a blanket of about 1% to 2% deductible across the entire policy, progressive, savvy operators are structuring the tied deductibles, placing a higher deductible, like your 3% to 5% specifically on wind and hail, while maintaining a standard $25,000 in terms of all of that perils, all of the deductible. Now, let's look at the aspect of parametric insurance policies. Parametric insurance pays out automatically based on a predefined triggers, such as wind speed exceeding 80 miles per hour within a 2-mile radius of your property, rather than an adjusted loss estimate. Talk about some strategy. Laying a parametric policy, using a parametric policy over a high deductible primary policy cuts overall premium cost by 20% while protecting your emergency reserves. Another aspect that I want us to look at is captives and buying pools in terms of insurance. Your mid-sized sponsors are grouping their taxes particularly into master property insurance pools, or forming group captives, aggregating they're about maybe a pool of a number of units, like your 2,000 units, gives sponsor institutional negotiating leverage with some insurance out there. If you have a pool of quite a number of your portfolio in one basket, that could restructure your insurance and give you a break. Let's look at professional tax as on the aspect of operating expenses. What are the technologies out there that can shield you, or rather help you with operating expenses? Lenders and insurance underwriters in 2026 they're not just looking at your financial statement, they are underwriting your protect stacks. I'm talking about they're looking at if you're using technology in the way you manage your property, your water leak detection system, water damage accounts for about 40% of non-weather related losses. By now we know that claims in Texas apartments. Installing a smart water sensor on hot water heaters or main supply lines cost can drastically save you $150 to about $400 per unit. Then also to insurance discount. Major carrier offer 5% to 10% annual premium discount for property with active shut-off sensors. What about utility savings? Automated shut-offs valves prevent run-away water leaks that spike your municipal water bills in terms of your utility. Immediately lowering utility expenses. Smart HVAC, what about that also too? That is automated. Integrating smart thermostat in vacant units prevent maintenance crew from leaving air condition running at, say, they're about 68 degree in empty apartment during hot Texas summers, reducing house meter electric bill by there about 15%. So those are smart ways of helping the bottom line when it comes to operating expenses. So what's the takeaway? To wrap up today's show, I want us to take away the fact that property tax can be appealed aggressively using current income realities and new BPP exemptions. Insurance costs can be controlled using tied deductibles. We talked about parametric coveraging or portfolio buying pools. Then protect also prop techs also, so like your smart water sensor, we talked about that earlier on, also that delivers a dual return of low utility bills and direct insurance premium discount. They're looking at all these things right now, and it helps them underwrite in a savvy way that can help us as investors. In 2026, value add isn't just about putting countertops in kitchens. It's about operational discipline. You got to be disciplined with the way you operate so that your bottom line could give more room for cash flow, and at the back side of things, your appreciation in terms of distribution at the end of the day. So I hope, talking about Texas taxes and insurance today, see ways we can mitigate, has really helped somebody today. To connect with me, connect with us here at Commercial Property Club podcast, head to www.commercialpropertyclub.net. You can send me an email also to ola.I@commercialpropertyclub.net. Don't forget to subscribe to our YouTube channel also too. Our YouTube channel is alive, vibrant. You want to subscribe, give us thumbs up, give us a review, a feedback, leave us a review, and share with someone how they're looking to grow their portfolio in the year 2026 and beyond. You can connect with me also too on LinkedIn. Ola Ibiwoye is my page. Facebook also too, we're present on that also too, as well as Instagram, Commercial Property Club. I am your host once again. My name is Ola Ibiwoye. Thank you for tuning in today to this podcast. Keep your operating expense lean and keep adding value to your tangible asset. I will see you another time. Thank you.